Our expectation is that we're still looking at a hard landing recession. And I think it is still coming. The real wrinkle this time is to a degree some consumer spending on services and jobs in general.
The number of retailers in danger of going out of business is increasing this year. Some companies that previously recovered from bankruptcy are now facing a threat again. Meanwhile, other companies that have been stable for decades are struggling with debt, low revenue, and fierce competition. Today, we have compiled a list of 15 big box retailers that have indicated they may go bankrupt by the end of this year. Number 1. Tuesday morning. On May the 2nd, 2023, Tuesday morning, a retailer specializing in discounted home goods and merchandise filed for Chapter 11 bankruptcy. The company cited overexpansion and escalating costs as key factors contributing to its financial struggle. As part of its bankruptcy plan, the company announced the closure of approximately 270 stores, resulting in the layoff of approximately 1,600 employees. Number 2. Abercrombie & Fitch. Abercrombie & Fitch is a clothing retailer targeting teenagers for 130 years, maybe in its final year. In 2022, the impact of inflation led to a significant drop in sales, which was higher than expected. As a result, they had to close nearly 150 stores. Number 3. Barnes & Noble. The company is experiencing a significant cash flow decline, with overall sales dropping by 7.9%. Its losses have also increased from $20.4 million to $30.1 million compared to the previous year. With e-commerce giant Amazon capturing a larger market share, traditional physical bookstores like Barnes & Noble face a bleak future. Number 4. Circuit City. On November the 5th, 2008, Circuit City, once the largest electronics retailer in the US, filed for Chapter 11 bankruptcy. The company cited mounting debt and declining sales as primary factors contributing to its financial struggles. Circuit City operated around 800 stores across 49 states at the time of the bankruptcy filing. As part of its bankruptcy plan, the company closed approximately 500 stores and laid off about 34,000 employees. Unable to secure a buyer, Circuit City had no choice but to liquidate its assets. Ultimately, the company's final store closed on January 15, 2009. Number 5. Gymboree. Gymboree, a children's clothing retailer, faced financial difficulties that led to its bankruptcy filing in July 2017. The company's growth slowed in the late 2000s due to increasing competition from online retailers. In 2010, Bain Capital acquired Gymboree for $1.8 billion to revitalize the brand. Despite Bain Capital's efforts, Gymboree continued to face challenges. In 2017, the company filed for bankruptcy, resulting in the closure of approximately 375 stores and a reduction of $900 million in debt. Number 6. Macy's. Macy's, a high-end department store chain, has a history of bankruptcy filings. It first filed for bankruptcy in 1992 and then again in 2003. These filings highlight the company's vulnerability to economic downturns. In 2020, Macy's managed to avoid bankruptcy by securing $4.5 billion in financing. However, the situation has drastically changed in 2023. Over the past few months, the chain has experienced store closures and declining sales in physical and online stores. Number 7. Toys R Us. Toys R Us, a prominent toy retailer, faced significant challenges leading to its bankruptcy filing in September 2017. The company struggled with a substantial debt burden and increasing competition from online retailers. In 2017, Toys R Us filed for bankruptcy for the first time. This resulted in the closure of around 180 stores and the elimination of $3 billion in debt. Despite these efforts, the company failed to regain stability and filed for bankruptcy again in 2018. Number 8. American Eagle. American Eagle, a global specialty retailer, has struggled financially for several years. The current situation appears particularly precarious. The company's liabilities amount to $1.41 billion, which exceeds its available cash and near-term receivables. This puts American Eagle on the brink of bankruptcy once again. Number 9. JCPenney's. JCPenney's, a department store, was on the verge of bankruptcy and filed for Chapter 11 protection in the first quarter of 2020. It successfully emerged from bankruptcy in November with the help of 2 firms. However, the company has not yet released any financial reports since then, claiming to be on solid footing. However, data from Retail Dive indicates ongoing volatility under its post-bankruptcy ownership. Despite emerging from bankruptcy, JCPenney seems to be stagnant, with little ambition to improve its situation, according to Neil Saunders, the managing director of Global Data. Number 10. Borders. Borders, a significant bookstore chain, encountered difficulties in the early 2000s due to intensified competition from online retailers. In 2011, Borders filed for bankruptcy for the first time, resulting in the closure of approximately 200 stores and a reduction of $1.2 billion in debt. Unfortunately, Borders could not rebound and filed for bankruptcy again in February 2011. This time, the company closed all of its stores and terminated its workforce. Number 11. Radio Shack. Radio Shack, a prominent electronics retailer, encountered challenges in the early 2000s due to heightened competition from online retailers. Additionally, the company faced difficulties resulting from strategic errors, such as shifting focus to selling cell phones while neglecting its core electronics business. In 2015, Radio Shack filed for bankruptcy for the first time, leading to the closure of 1,700 stores and a reduction of $3.9 billion in debt. Unfortunately, the company failed to rebound and filed for bankruptcy again in 2015. This time, Radio Shack closed all of its stores. Number 12. The Limited. In January 2017, The Limited, a renowned women's clothing retailer, filed for bankruptcy and closed all of its stores. The company had struggled financially for years due to heightened competition from online retailers and fast fashion brands. Additionally, The Limited faced challenges from its growth strategy, which involved excessive expansion and accumulating debt. In the early 2000s, the company encountered obstacles due to the rise in competition from online retailers and fast fashion brands, which impacted its profitability and sustainability. Number 13. Brooks Brothers.
Yet another iconic company with deep American roots. 200-year-old Brooks Brothers filed for bankruptcy protection on Wednesday.
Brooks Brothers, a high-end clothing retailer, has been severely impacted by major companies' shift towards remote work and the relaxation of white-collar dress requirements. Since the lockdown measures were implemented across the US, Brooks Brothers' financial situation has worsened, leading to its bankruptcy filing in 2020. The company has experienced a significant decline in its store count, dropping from 400 to just 125. Number 14. Revlon. On January 16, 2023, Revlon, a renowned cosmetics company with over 90 years in the business, filed for Chapter 11 bankruptcy protection. The company was burdened with a substantial $3.5 billion debt and faced difficulties meeting its financial obligations. Revlon's challenges include increased competition from new brands and the adverse impact of the COVID-19 pandemic. To continue operating, Revlon is seeking to restructure its debt. The company has agreed with its lenders to reduce the debt by $2.7 billion. While the bankruptcy filing is a setback for Revlon, it does not necessarily mean the end for the company. Revlon possesses a strong brand and a dedicated customer base. If the company successfully restructures its debt and improves operational efficiency, it has the potential to emerge from bankruptcy in a stronger position than before. Number 15. Bed Bath & Beyond. Bed Bath & Beyond has encountered significant struggles over the years, influenced by factors like escalating costs, intense competition from online retailers, and shifting consumer preferences. Consequently, in April 2023, the company filed for Chapter 11 bankruptcy protection. As part of its restructuring efforts, Bed Bath & Beyond intends to shut around 200 stores, renegotiate its debt, and prioritize its online business while enhancing the customer base. The outcome of Bed Bath & Beyond's bankruptcy filing and its ability to re-establish itself as a viable enterprise remain uncertain. Nonetheless, the filing serves as a reflection of the significant challenges confronting the retail industry. That's it for today. Thanks for watching.